Good morning, traders. Welcome to Wednesday, I think it is. Is it Wednesday? Tuesday, Wednesday. It's one of them weeks again. Morning, Stel.
Good morning.
Morning, morning.
It's one of those years, isn't it?
Yeah, one of those years this week. Yeah. Someone's going to laugh at this in our chat room, but it feels like one of these days where I've done a day's work and it's only 10 o'clock in the morning. Lots of stuff going on. How are you anyway, mate?
I'm okay. Lots of stuff to do, but all good.
Good. Give me a second. There's some more comments out from the Bank of England.
Really? What are they taking back this time?
More financial stability stuff. Nothing major.
Vulnerable to loss of your foreign investor appetite for UK assets. Yeah.
FPC maintains banks' counter-cyclical capital buffer at 2%. So they're keeping the insurance policies on. Cable getting a little lift there, as we can see. God, I folded my longs now. Anyway, let's crack on into it. Obviously, the pound and what's going on with the BOE is the big talking point today. Lots to talk about on that one. So let's get some of the other stuff out the way first. Dollar yen's been making a move up above 146. We've had the usual line of officials coming out. Suzuki, no change to the rhetoric there. Watching against volatile FX moves. These moves aren't volatile. As expected, 146 not really holding much in the way of resistance. A lot of people, as mentioned, probably leaning on that level as a possible intervention level. That's not come about. Again, as expected, we've had a little stop run through, got up to sort of 20s before then pushed up to 40s before stabilizing. But we're holding the 146 break at the moment, as you can see there from the price action. So the trend remains up for now. But as you can see, it's not going on another moon shoot. It's creeping up. While we're in Japan, just look at that, some data overnight, probably partly helping here. The Tankan index, which is an index of manufacturing and non-manufacturing
Is it
firms,
tanking? Is it tanking index
dropping
tanking?
down to 5 from a prior 10.
Oh, we can't see your screen, Ryan. Yeah.
Oh,
yeah.
Something.
I thought you were just talking in general before you showed us anything, but there you go.
Right. Well, that's what I was mentioning on dollar yen. We had the break through 146, probably a bit of a stop run into the 20s, creep higher to 40s, but instantly we've got support down at 146 and then 146.04. So maintaining the break, but as I said, nothing volatile here for the MOF or BOJ to get worried about. There's the data there. Tankan index dropping to 10. It has been running pretty positive though. Since the COVID lows, the COVID problems. But as we can see there, the trend is just starting to creep lower. So we'll keep an eye on that. We know Japanese data on the whole has been pretty good, but there's some signs of wobbles, let's just call it that. Manufacturing or machinery orders down 5.8%, worse than expected, turning around plus 5.3 the month before. Year on year, still positive, but not as high as expected. So as we say, the data largely is good in Japan, but there are some little niggles going on there. The RBA Deputy Governor Ellis said the RBA's neutral rate is more of a guide rail, and they see the nominal neutral rate at least 2.5%. The current rate at the RBA is 2.6%, so they're there or thereabouts. The question will be how high above that they want rates to go before they bring them down to those levels, and obviously the speed at which they may bring them down, the fabled pivot as it's called when talking about the Fed. ECB's Vilroy was out talking about neutral rate as well, and he says it should be close to 2% by year end. So his number for a neutral rate is around 2%, and he reckons they're going to get there by year end, which is entirely possible. But again, we're a lot lower rate from the ECB than we're seeing elsewhere. So how high above that they're prepared to go again before turning around remains to be seen. He also said that G7 intervention worked when it was coordinated. Not quite sure the context on that one, but obviously we can make connections to FX and everything that's going on. Japan obviously at the G7 meetings there. So just a comment there. We do have further meetings between the G20 lot this week, and they're going to have the finance ministers and central bankers meeting as well. So further comments to come from that. Fed's Mester was out quite hawkish yesterday evening. She said they yet to make, or hikes have yet to make any impact on inflation, which is quite a strong point there, because as we've been mentioning, we're not really seeing massive impacts from the hikes yet. She also said doesn't expect the Fed to lower rates in 2023, so giving the pivot lot a little kick up the arse, saying they're not expecting to lower rates in 2023. We'll have to see how car crashy the soft landing is before they decide on that. Also said the biggest risk is the Fed not hiking enough. So I said pretty hawkish comments from her, still ready to do more. Again, pretty much echoing the Fed line that they're going to keep hiking until they get inflation under control. And as we say, the question is going to remain, how much damage will that do to the economy, keeping that tone? Speaking on inflation, there was a minor report out yesterday, New York Fed inflation survey, consumer inflation survey, and I'll get that up for you now. Where was it? This afternoon. There we go, that one there. Came in at 5.4% versus 5.7% prior. This is the 1 year or year ahead expectations for inflation. That was a third drop since it peaked at 6.8% around July, I think. Likely what's called the gasoline effect, where a lot of US consumers tend to have inflation thoughts around what gasoline prices are, rather than how much a pack of sausages cost, if you get my drift. We've seen gasoline prices dropping pretty much for the last 6 months, I think. So that plays into a lot of US consumer inflation expectations. However, on the 3-year expectations, they did jump a pip to 2.9% from 2.8%. So still further out, they are seeing higher prices in the pot. Over to geopolitics, and Putin was out with a fair few comments yesterday. Now, the G7 leaders were mainly talking about the Ukraine situation, how they're backing the Ukraine, how they're against Putin and what he's doing. But Putin was coming out during all that as well, saying things like they're open to dialogue, but the US has made noises about opening dialogue, but it's all false and fake and everything else like that. But he's reiterated a couple of times, and the Kremlin has reiterated this, that they are open for dialogue. But he also adds that the special operation in Ukraine is going to continue until it reaches the conclusion that he wants. So a bit of empty air from that. What will be a change is if we really start to get stronger comments on potential dialogue, particularly from other countries outside of Russia, that perhaps they're looking to engage. If we get something like that, that's going to give us a risk boost, and hopefully, touch wood, and we all hope, end this tragic war once and for all. But for now, it's just some hot air comments that we're hearing. PBOC, they're still fixing the WAM rate down pretty low and pretty much under where it's been trading, where CNH has been trading, CNY have been trading. 7.11 they fixed it at last night. I think it was 7.083 the day before. This is all the while, as you can see, we're still running up at the 16s, 17s, 19s, even up to 20s yesterday. So they're keeping the fixes lower, which is maybe a bit of a signal the market's not picking up on at the moment, that they're not willing to let the fixes at least chase the market higher. So again, one to keep an eye on. Right, before we get into the UK stuff, Stel, you got anything you want to add, or anything headlines you've seen popping up you want to talk about?
Nothing more than what you said. Actually, on the chart you're showing there, I mean, that looks like a bullish pennant or something, right? So it looks ready to explode higher, that USD CNH. But no, data-wise, sorry, news-wise, it's all about the UK, right? I mean, wow, they're toing and froing every 10 seconds. But where's Cayman when we need him? Yeah, exactly.
Yeah.
No, nothing more to add. Sorry. I mean, you covered it. You covered it.
I know you like to pick up some gems now and again that we miss, so just want to make sure we get everything covered.
Yep.
So right, let's get into the UK, Bank of England, everything that's gone on. There's a couple of important points I want to make here, and the first one is that you've got to know your headlines, because what's happened today has been interpreted by the market, but it's been interpreted wrongly. And if you know that's happened, then you know how to trade against it. And I'll explain what's happened. So yesterday afternoon or yesterday evening, we had Bank of England's Bailey coming out and saying that they will end bond buying on Friday, the date they expected to, the 14th, and that pensions pretty much have 3 days to sort their shit out and rebalance and get everything done that they need to get done. Okay, so that was market negative in the first instance. Then at 5 a.m. this morning, we got an FT piece saying that the Bank of England have signalled privately to bankers that it may extend bond buying. Now, that's a positive, because we've just heard Bailey saying it's going to end, and now the FT are apparently reporting sources saying that they're going to extend. So what did we see in the pound? Let's get it up. So last night we got a big rally in the quid. We got this big spike here from sub 109s, 109.50 right up above 110. Okay, that's what the market saw. They saw Bailey saying something negative, FT saying something positive. But if you read the story in detail, it mentioned that the comments on extending, and this is from sources, people speaking to bankers or whatever, those comments happened before Bailey spoke last night. So now the timeline is different. It's not Bailey and then the FT issuing these comments. It's these comments came first. After that, Bailey then said they're ending on Friday. So rather than it being, as the market has interpreted, Bailey negative for the pound, FT story positive, the real timeline is the FT story positive. If we'd have heard about that yesterday before Bailey comments negative. Okay, now that's important because it changes the complete complexion of how you should trade the pound. Now, those of you in the chat room, you would have seen from the trade room, I've been doing exactly that this morning. I was short the Bailey comments last night. I was holding a short overnight. It was sitting looking pretty. Got knocked out on the FT story at 5 o'clock this morning. Nothing I can do about that. I was asleep. However, I come in and I read the story, and I read that line that the comments about extension were before Bailey spoke. And I know now, if we get any comments, further comments saying that the Bank of England are going to stop on Friday, that's going to be negative for the quid. So I hit a headline exactly that we got this morning, got into shorts, got out for 10 pips, half the trade, then got out the rest because it wasn't following through. So that's why it's important to know the headlines, because all I've read on Twitter and everywhere else is that the FT story was a positive, but that's not the case. It came before Bailey. And it's important to know that interpretation, because then you know how to trade this market. Now, what's happened since then is that we've had another rumor out this morning saying that Liz Truss is apparently going to do further U-turns on this mini budget and all these tax policies. That's why we've had this latest rally in the pound. Again, I traded that, jumped in alongs, around about the 110 level, rode it up to the 50s. Now, what are we waiting for with this one? Well, obviously, the big reason, or the big thing we're waiting for now, is a possible denial. So the risk for the quid here is that Liz Truss or the Chancellor or someone official from her office comes out and says that story or that rumour earlier is rubbish, we're not changing our plans. likely we'll see cable all the way back down to 110, maybe worse, because now we've got Liz Truss doing exactly the same as what she was before, and we've got the Bank of England ending their bond buying on Friday. So we're in no better position than we were 12 hours ago, 15 hours ago. So anyway, that's how I'm interpreting the news, and it's important for you boys and girls to look at news headlines in detail. Don't just go by the time of a story coming after another one. Read the actual story, read the lines, see the real timeline, because it can make a huge difference to your trading.
Ryan, Ryan, Mike is asking a good question. Yeah, there you go.
Yeah.
There you go. Yeah.
And don't you think the Friday deadline is pricing out? Yes. The fact that the Bank of England officially confirmed it a few minutes before the show, yet the pound didn't fall any further, shows that, yeah, that's understood. And now what I suspect is that we're remaining bid on the Liz Truss stuff. So if we get a denial that she's going to, you know, do a U-turn on all this budget stuff and tax stuff, I expect the pound to go all the way back down again. But yeah, as far as Friday's concerned, you know, we've had so many headlines now. The market does get bored with it. It does mark its position, if you know what I mean. And on we go. Of course, if we get to Friday or tomorrow, whenever, and we get something that they may extend, then of course things will turn right around again. But that's the nature of headline trading. You don't know what's coming in the next 5 minutes, the next 5 hours, the next 5 days. But when you do get these things, you have to read them properly and understand what they mean. Because sometimes the news wires like Bloomberg, the FT with this piece, they can phrase the headlines in such a way to get a market reaction, yet when you read the details, it says something completely different. And if you want to trade headlines, that's what you've got to learn to understand. So for the quid here, I mean, I'm not really interested in the technical picture here. It's swinging between headlines here, there, and everywhere. I'm just trying to job around those headlines. You know, I'll watch the short-term levels. You know, 109.50 was one last night. That's where it pulled up. Then we had the slip below during Asia. Now it's support again. I'm not going to set my house on it, but that's a level I'm going to keep an eye on if I'm going to keep trading these headlines. Right, so that's a little bit of insight there on what's actually happened this morning. Please excuse me if I take a little pause now and again. I've got a bit of a head cold coming on, I think, so I need to have a little sip of water now and again. Right, so let's get into some of the other price moves. As said, dollar yen having a little move up here. Keeping an eye on the longer term levels here. I know a few of you guys look at fib extensions, so on and so forth. That's not something I really look at, extensions, but we have got a big fib approaching up in the 147s that I highlighted yesterday. Big long-term fib, so you know, going all the way back to the 80s. So this one is a potentially huge one. It also marks an area of prior action that we saw in 1998. So we're creeping up towards that level. I am short and looking to add to shorts. Not sure if I want to add here or wait until potentially getting a move towards those highs. I'll look at it as the price action goes. Today we have US PPI data, which, while not as big as CPI, will be looked at. Let's get into the right calendar just to see what's going on there.
I would argue that
PPI numbers there. So expected to dip back a touch on the headline number, but stay pretty much unchanged on the core PPI. Now this could, as I say, it's not as big as CPI, but it will be looked at in that same light. So any big variation here could get the market changing expectations for the CPI tomorrow, which is obviously going to be the big number to watch. So in light of dollar yen, what's it going to do here? I think we've got to watch this 146 area. Watch this fib. I love a long-term fib because they can be really good to trade. You sometimes have to give them a bit of room. It's no good, you know, selling at 147.34 with a stop at 38 or anything like that. Sometimes you have to give it a bit of room. You know, maybe 40, 50 pips. That's just the way it works against these big levels. But that's my next major stop there. As I said earlier, in the short term, 146 is the marker for now. If that continues to build a support, that's going to keep this potential break up in play, and the break is really from 145 from all this prior action here. So that's the real break. This is looking like a secondary break, if you like. Support is really, you're looking at the double O's and the 50s on the way back down. So keep an eye on those if we do move lower. But for now, the trend remains firmly in place. Right, Mike's out with a comment. Oh yeah, Gavin, PMQ's at 12. That's going to be a good one. I'm going to tune into that. For those that don't know, that's Prime Minister's question time. I think it might be the first. Did they have one last? I'm not sure if they had one last week. I was away, but they're always interesting just to see what a circus show it is. So keep an eye on that. You can get that on the Parliament TV website. City discusses the scope for further MOF intervention. We trade over the 146 level for starters. Yeah, as we've been saying, Mike, they've achieved what they set out to, which was take the volatility out of the prior moves. That's what the intervention is all about. And so I always say it's wrong for people to put numbers on where they might enter back into the market. That's not what they're looking at. They're looking at if the market is swinging around 200-300 pips in a session and it's looking more speculative. That's when they intervene. That's why they intervened here, because we went in the space of a couple of days, 142s up to 146. That was the straw that broke the camel's back. So this move here, no, and I've said it many times over the last few weeks, this thing could go to 150, 155, 160, and they won't intervene if it just creeps there over the course of 2, 3, 4 months. If we go there in 2 sessions, then they're going to step in. So you need to know what they want to accomplish, what their mission is when they intervene. So yeah, Brad, that's it. It may be a grind, but you're going to get people coming out and saying, oh, if we get here, they're going to intervene. If we get there, they're going to intervene. Listen to what the Japanese officials say. They're not shy coming out every day, 3 or 4 of them saying the same old thing. If they start to change their rhetoric, then you start to learn the steps that build up to possible intervention. Right, aside from that, going to look at dollar CAD.
Brian,
very nicely. Yes, mate.
Just wanted to add one thing. You're talking about the upcoming data, and I would argue that PPI could be more important than CPI, because one is, producer prices is leading, the other one is lagging. So we are currently looking to see when central banks are going to say, right, that's it, inflation has peaked. We're going to take the foot off the accelerator. And I think this kind of leading indicator is becoming more important. Obviously, the market always looks at CPI. It's the official inflation measure, blah, blah, blah. But I think for getting an idea on where we're headed, I think PPI has become more important than it used to be. That's what I want to say.
That's a fair point. That's a fair point. It should also be noted that the PPI numbers can be very volatile, though. I mean, we know CPI is volatile at the moment, but you look at some of the PPIs in Europe, they're running 35, 40, 50%. Even while inflation is not at high. So Stell's absolutely right. It can be a lead into what the CPI does, but you've also got to take the volatility. If PPI in the US drops by, a point or 2, that's not going to suggest that CPI is going to drop 10 points or anything like that. But if there are some wild swings, and again, it's all about the trend. If we start seeing these numbers trending lower, that's going to naturally feed into inflation. But yeah, wise point, mate, as always.
All my points are wise. Come on, what are you talking about? I'm kidding.
That's what I said. As always. As always. You're the best pointer I know. Yeah, so dollar CAD. This one's been playing nicely up at this 138.50s area. Obviously, we've had the call it a double top up here, short-term double top over the end of September into October. It's now, you know, give or take a few pips, it's holding up here. I've been playing a few shorts off of this one, as the folks in the room will know. Had a decent run. I had a partial TP at 37.10 for overnight, and it got to 14.6 before it turned around and then hit my trailer on the other side. You know, again, such is life in trading. But I got in again this morning, 138.20. Not going big, just scalping off the level, do the rinse and repeat until it works. I'm still running buy stops, reverse if it breaks. And if you want to know what I'm doing in greater detail, obviously come and join us in the chat room. You know, much like yesterday, trying to give you the guys the advice, you know, on how to trade and how to set up long-term trades and look at markets. You know, we do this all day long in the chat rooms. So if you want that for more than the 45 minutes to an hour you get every morning here, then obviously come in and say hello, join the chat room. The price has gone up, by the way, I should mention that. I will get the link for you now though, but you can still get a 20% discount, exclusive Forex Flow discount of 20% off that price. So that's just for all you good boys and girls who come to the Flow show. I'll put the link in there for you. But yeah, if you want to get more insight into what happens in the trades room, because we do this stuff live, and I will show you that just quickly. Let's get into the trades room there. So pretty much just been me this morning, jobbing in and out of cable all day. So yeah, what we advise, what we like to say in here is that you put your trades up in good time. People put their trades up in good time. We don't want any hindsight heroes. No good telling us what you did 3 hours ago. Doesn't help anyone. What we want to give here is an idea of how people trade, what they look at, what makes them buy or sell, what's the reasoning behind the trade, how they manage a trade. This isn't just to say, you know, look at me, I'm really great, I made these many pips. We want to know the reasons why you're trading. So that helps other traders understand how people look at markets, why I'm trading what I'm trading, and how I manage the trades. You know, Stell's in there, Blake's in there, all the guys are in there. It's really a place if you want to learn, you know, come in there and have a look. Anyway, back to that. So dollar CAD, looking at really playing this top range here down to 137 is my main lower tier number for that. We got this midpoint around about the 60s, 70s here, a bit of a pivotal area. Keep an eye on that for if you're trading it. Fundamentally, you know, we've got oil moving around and all this headline stuff. You know, we had this run up on the OPEC cuts, then we heard about hedge funds getting in. Now we've had a little bit of a dip off, so a little bit of sideways action probably now, a bit of consolidation perhaps around this 90 level. Again, looks like it might be a bit pivotal, the 90 buck mark. So if you're trading oil, keep an eye on that level there. Gold quickly, and I'll bring still in as well. My old favorite zone, 75.85. We had to move up, couldn't get above the top of it. Now we're back below. Now it's resistance again. And what was I saying yesterday about this 60 area? You know, that's where the next level it needs to be. I've not actually traded this, but I keep an eye on it. And at the moment, technically, when things are quiet or fairly quiet, it's sticking to the levels. I have said this is being driven by what's going on in yields and everything else. But while there's no bigger moves in those, then the techs reinforce themselves, and that's what we're seeing here. So nice levels there, playing nicely. If you want to be jobbing in between these levels, you know where you are. Again, I still think we need to see probably 55, 54 broken to the downside to confirm a break of this level here. Stel, any update you want to add on silver quickly?
Yeah, I think as long as gold is below that 1680-ish level, metals are gonna trade weak. Yes, we do have the odd rally, but as we saw yesterday, silver, gold. Well, gold didn't move that much yesterday, but silver was almost unchanged at some point. Then it just got flushed together with risk. So as long as the risk gets sold, which I think rallies are going to get sold, there's no point being early or trying to pick a bottom in. Stay on target. Yes, Simon. 1880 could be, yeah, could be a level there, but I wouldn't touch it yet. I'm very, very bullish in the medium term, but I want to get as best an entry as I can, and being patient and waiting has proved to be right over the past week. So I'm not deviating from that for now. We need to see gold breaking above 1680, really 1690, and just perhaps rallying above, retesting that, and then just going. If that happens, then I think silver is a buy as well. But until that happens, I'm not. I think we should be waiting.
Yeah, definitely, mate. Definitely seems in a bit of a tight range, isn't it? I mean, that's to me, that's
patience
that's a market
saves.
Doesn't know where it wants to go.
Like Brand says, patience saves pips. Very, very wise words. I have 2 words for you, like Biden said. Did you hear that? He said, I have 2 words for you, made in America, which is made in USA, something like that. So I have 2 words for you. Patience saves pips. Yeah.
Very good, mate. Very good. Yes, Scott, where did you find those trades you were just talking about? Do you mean the screenshots I was showing? I'll just show them again quickly. Oh, no, that's not the one. Let me get the chat room down. So those trades are in our trade room on the platform. Now, this is our chat room. So we have the main discussion, general discussion. That's where we could talk about the analysis in detail. If I'm looking to trade this or trade that or trade the other, charts go up, that sort of thing. So we do most of the analysis people do most of the analysis and chat in the general chat room. But we like to ask people if they're going to put up a trade, put it in this trade room, and it's here. So, you can see there's our very own brand. You can see on the chat function here in Zoom on the webinar. And we get everyone putting in their trades. There's Blake. As I say, just giving an idea why they're trading. There's Lunda Max closed out of shorts looking for a bounce. 37.25. It's about understanding why people are doing the trades. And a lot of that information is in the general chat room, but we like to keep this live as possible. I'm putting these bits and pieces up where I've cut, where I've sliced, what I've done, pretty much seconds after I've actually done the trades or done the cut or moved the stop losses or whatever, because it's important that when you have something like this, we're legitimate and that everyone's legitimate. You don't learn anything if you're messing around, putting up trades you did 2 hours ago, making it up as you go along. You're not doing yourself any good. You're not doing anyone else any good. It's just trying to learn about how people do stuff. So yeah, that's how we're doing it. Yep, you can see that now. Cool. Right. So that's for users only. So I'll get rid of that. Right, boys and girls, have you guys got anything you want to look at in particular? I've been a bit contained with what's going on in the pound and this Bank of England and trust stuff, so I'm not really looking at an awful lot otherwise. Keeping an eye on Aussie dollar, which is another trade I'm in. Just broke the lows. I was looking at that 50 area from yesterday, and we just got a little nick below those lows that we saw yesterday overnight, but only about 10 pips, and we're back above holding at the moment. What I was looking for, if you may remember yesterday, was just seeing if we held the lows again. If we did, then that gives a bit of conviction that we found some sort of bottom. But the fact we've gone even just 10, 11 pips below, it keeps the trend going for the Aussie dollar. Now I'm playing it from the long side, very small. I would have liked to have seen 50s hold, but it hasn't. It maybe has sort of cracked the egg there so we've still got the potential to head lower from here. So until I get signs of a definitive bottom, the bearish trend remains in play. UK's opposition Labour Party granted an urgent question in Parliament on the economy, and we'll be after PMQs. Okay, we'll keep an eye on that. Thanks, Gavin. no doubt we can probably guess what they're going to say, how the government's ruining the economy, which you can make your own judgment on that if you're in the UK. Well done, Hugo. Made 70 pips on Euro Aussie. Well done, mate. Very good. Always good to hear you guys and girls making good money there. Right, come on. If you've got something you want to talk about, throw it up now. Otherwise, we might call this one early. As I say, I've got half my eye on the trading screen, and we did have a good old session yesterday. We've got a lot to. Can we look at yields? Yeah, let's have a quick look at yields. So US 10s. This perhaps is showing a bit of disconnect now between dollar yen and yields, because we had yields making new highs yesterday, well below the highs, or quite well below the highs today. Yet dollar yen didn't follow yesterday, but it's going up today. So a bit of a disconnect there between what we usually see in yields versus dollar yen. But in the moment, I think we're just waiting for these CPI numbers to come out, and indeed the PPI numbers. Let's take a bit of a longer view on that. So the 4% mark is the big marker for US 10s at least. That's the level we're going to look at. If we break above there, then potentially we're on for another round, another shift up, higher in yields. If not, that could be where the market finds a bit of a top for yields. But if it's all going to depend on the PPI and CPI numbers. I'm actually thinking, and been thinking it for a while, that we may see PPI and CPI moderate, well, CPI mainly moderating, inflation moderating in the US. We have seen that divergence between headline CPI and core CPI. The headline has dipped, I think, the last couple of prints. It's gone up in the core the last couple of prints. So there's a bit of lag there between the core inflation and the headline. It's the core that the Fed will be most interested in, because that's the stuff that really roots itself into the economy. UK yields, looking at that now, here we are back up against the highs. And this is even while cable's climbing. So, what's the market seeing here? Are they thinking that Liz Truss is going to go backwards, or the BOE are going to have to hike more? We're not out of the woods here on the UK yields at all. We're still being the poster boy for what's happening. So, yeah, just nicking new highs by a couple of ticks in yields there. As I mentioned, keep an eye on whether we get a denial. It could come in PMQs. There could be something said during that. That's at 12 o'clock, as was mentioned by Gavin. Anything you want to talk about in particular, Paul, about yields? Anything you're looking at? We're just saying the 2-year yield looks like it wants to move higher. Yeah, there was a bit of a move around the curve yesterday. And when we saw, US 10s heading higher, the shorter end wasn't coming up as much, and there was moments where it was actually the yields there were dropping while 10s were rising. So this is going to be part and parcel of what we're going to see over all this data, repricing along the curve, what it means for rates, potentially how much quicker they're going to rise, over how long they're going to stay up there for, before how quick or how long they start to come down. And that's what we're seeing with these little curve moves. But generally, if you're not into watching your bonds, watching the yields, just stick to the 10 years. They give you the best broad view of bonds overall. Look at the 10 years for all the countries. Paul, seems to be consolidating. Yeah, I think we're waiting for this data. Obviously, we've got retail sales Friday as well. We've got the G7, G20 finance ministers meeting. We've got the potential for the PBOC rate cuts tomorrow. We've got the Chinese National Congress starting Saturday. Still got lots of headline risk in the pipeline, so lots to keep an eye on. Angela, plan the trade, trade the plan. People need to have that tattooed on somewhere. There was another tattoo people needed yesterday. Can't remember what it was, but yeah, I should open up a tattoo shop. I'll make a lot of money tattooing all these bits of advice. Right, before I start waffling on to oblivion, Stel, anything you want to add lastly before we close shop?
Not really. Just be careful and times are difficult, volatility is high, which means opportunity, but also risk. So size accordingly and take profits when you can. I think we're chopping overall, so I would be quicker in taking profits than usually.
Yeah.
Yeah. And thank you, Ryan, for another great day and analysis, basically.
Yeah, thanks, mate. And just to echo it, yeah, if you're trading the pound and you get a headline move that goes your way, take some money. There's nothing wrong with taking some money because you never know when it's going to go the other way. And on that, have a great rest of your day, folks. We will have a roundup of what's gone on the rest of the day tomorrow on the show. Trade safe, make many pips, and we shall see you tomorrow. Thank you very much for coming.
Bye-bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.